Hello friends, welcome to our channel Financial Academy. Today we are come up with new videos about ESG investing. So first of all, we'll try to understand what is ESG. ESG is nothing but these are the three key elements of sustainable finance, that is environmental, social and governance. So let's have a look on about what is ESG investing. So, first of all, through sustainable finance, banks have the power to make a massive difference in the battle of for sustainability, from frameworks and policy guidelines for implementation to international networks. Come and join us as we are exploring why and how a bank should start investing in sustainable finance. So, any bank or any financial institutions of a country, they have contributed towards the development as well as economic growth of that nations. So considering this, as it is one of the concept of sustainable finance, whose aim is to be a sustainable development goal which was there by United Nations. So for aiming that goal, so these are the policies, these are the area where the government has taken a step towards achieving this goal. So ESG investing is widely seen as a way of investing sustainably, where investments are made with consideration of the environment and human well-being as well as the economy. So it is based upon the growing assumption that the financial performance of organization is increasingly affected by environmental and social factor. So considering the environmental and social factor with the governance part, that is called ESG. ESG is towards achieving the sustainable finance and to achieve for the achieving the goal of sustainable development. Let's see what E stands for. E stands for environmental consideration, and which might include climate change, mitigation, and adaptation, as well as the environment more broadly. For instance, the preservation of biodiversity, pollution prevention, and the circular economy. So as we know, the environment is one of the key factor which affected, and as we saw the pandemic which was since from 2019, that is from COVID-19, and it was impacted the whole world in 2020. So that's why this was one of the learnings that we saw, the whole world saw this learning. So that's why this is also one of the consideration where environment should be protected and for the betterment of any finance projects. Then S stands for social consideration. Social consideration could refers to issue of inequality, inclusiveness, labor relations, investment in human capital and communities, as well as human right issues. Then the G stands for, that is governance. The governance of public and private institutions, including management structure, employee relation, and executive remuneration, play a fundamental role in ensuring the inclusion of social and environmental consideration in the decision making process. So, in short, we saw the ESG in investment is what, that is environmental, social, and governance. So, considering these three key elements for any decision making towards the financing any project, for the development of any project, or for any economical development, that will be consideration with these three key elements that we call environmental, social and governance. Next, let's see what about history of ESG, because as we saw this ESG concept 100 years ago, but we are not making it into the practical, or the policy makers they have not bother about it. So if you are going to see the history of ESG, that is environmental, social and governance principles for investments, so the principle of ESG investing are nothing new. Hundreds of years ago, religious and ethical beliefs influenced investment decisions. Muslims established investment that complied with Sharia law, which included prohibition on weapons. The first ethical unit trust in the US and UK were developed by Quakers and Methodists. Today, the growing prominence of corporate social responsibility and social sustainability has led to increased investors' awareness about ethical participation in the market. So, ESG, economic, environmental, social, and governance investing may have officially entered a mainstream investing discourse following the release of the Principle of a Responsible Investment in 2006, a set of United Nations guidelines for the incorporation of ESG factor into business policies and strategy. The PRI, that is the Principle of Responsible Investment, have over 2,000 signatories and are widely considered the official point of reference for all things ESG investing. Now this is all about the area where the this ESG factor is considered. So while considering the ESG matrix, so environmental, so what are the key area that will be covered? First thing is the climate change. The second one is the greenhouse gas emission. Then resource depletion, waste and pollution, water and energy efficiency, deforestation, biodiversity. But looking into the social concentrate contents, so that will be working conditions, equal opportunities, human rights, employee diversity, health and safety, child labor and slavery, community engagement, and philanthropy. But looking into the governance part, there will be more on ethical practices, fair practices like business ethics, executive pay, broad diversity and structure, bribery and corruption, political lobbying and donations, tax strategy and compliance. So these are the metrics, or these are the key area where the sustainable finance is working, and with that this ESG is one of the key elements. So that was passed in 2006, and now it is being a reality after many learnings that we learned from the COVID-19. Thank you. So if you have not yet subscribed to our channel, please subscribe. You'll get notification for the more videos. Thank you.